So recently, I've been listening to a guy named Mohnish Pabrai, who investing with Tom, who's been on the channel. Shout out to Tom, put me on. I mean, he told me one quote from Mohnish Pabrai, and I was like, this guy sounds like he's really cool. If you've ever heard me say anything like flip heads and you win, flip tails and you don't lose a lot, basically that was stolen from Mohnish Pabrai. I stole that from Tom, who stole it from Mohnish Pabrai, and I love that quote. But basically, I was listening to a call that Mohnish Pabrai was on, and it was a Q&A session where he literally just spent about an hour just answering questions from a bunch of students about investing, about business, and about a bunch of other stuff. And in one of the calls that I was listening to, I just found one little segment of it so impactful. Before we get into the clip that I want to play for all of y'all, basically, the premise or the intro of the clip is somebody asks him about Warren Buffett being able to accomplish 50% a year, because Warren Buffett had said at one point in time that if he was managing just about $1 million a year, he would be able to get 50% returns every single year. And he was asking, would that actually be possible? And Mohnish goes into depth of answering the question of why Warren Buffett might be able to accomplish that. But then he also talks about something specific that I think can actually relate more to each and every single one of us. Because in their case, they're talking about $1 million being a small sum of money. For me, I'm like, $1 million is life-changing amount of money. It's not a small amount of money for me at all, but still using that idea of like what they're talking about, managing little amounts of money, was something that I believe that I could take from what he was saying and then implement it in my life in a different way. But here's what I mean. Let's check out the video real quick.
You just have to clone what Warren did, which is extreme patience with extreme ability to work hard, and with extreme action when you find no-brainers. I think in his 50%, he would probably not have more than 3 stocks. And, Warren used to always say, even 15, 20 years ago, that 99% of his net worth was in Berkshire Hathaway. And he doesn't say that now, because the 1% that he had outside Berkshire has actually grown significantly more than the compounding inside Berkshire. And the reason for that is that 1%, many times he had one stock. Okay, so he put the entire 1% in his highest conviction idea. And if you were going to do the 50%, you probably would not have more than 3 stocks. I mean, I couldn't do it, but if we were running, let's say, $20 or $30 million in capital, and I had told my investors we would concentrate very heavily, I try to get as large a position as I could in that Turkish company out of that. And then it would be meaningful, right? It might be 1/3 of the capital or 1/4 of the capital. And 4% of NAV with 1/4 of your capital put to work, good things might happen to you.
Did you catch it? Did you catch what he said? He talked about Warren Buffett, and he said, when Warren Buffett was initially starting out, Warren Buffett always talked about 99% of his net worth was in Berkshire Hathaway, and then he had 1% that was outside of Berkshire Hathaway. But however, now Warren Buffett doesn't say that anymore. Now Warren Buffett just says more. He doesn't even say what percentage of his net worth is in what anymore, because that 1% has grown so much to be more than what he has in Berkshire Hathaway. What I just got out of this is something that I've been mulling over. It's something called the Pareto principle. The Pareto principle states that 80% of your results come from 20% of your efforts. And also the reverse is also true, where 20% of your results come from 80% of your effort. And using that Pareto principle, I'm trying to turn that on its head and use it kind of to my advantage to understand that what exactly are the biggest businesses that I should focus on? However, also combining that with the idea of that 99 and 1%. So one thing that I've talked a lot about is the fact that most of my money that's invested in the stock market, most of my net worth is in a total stock market. It's just in an index fund, whether it's VTSAX, which is a total United States stock market, or the international, which is VXUS, or anything of that sort, where it's a mix of basically being just diversified to the upteenth degree, to the ultimate diversification that I can possibly have. That's where most of my net worth is. However, I'm spending the extra little money that I have in my pocket and looking for those businesses that I believe will be life-changing businesses. Just like Warren Buffett was able to do that over time, where 1% grew to overpower 99%. And so this is the takeaway that I want everybody to take from this. First of all, when you're investing, start off with investing with all your tax advantage account. Whether it's your Roth IRA, your 401k at work, all those kind of attack accounts. If you have a 403b, a 457, all those tax advantage accounts, invest in those. And because you won't have access to those things until you're age 59 and a half, just let that be a broad market index fund. Don't do anything kind of questionable. Don't do anything fancy in those. However, in your brokerage accounts, whether it's Robinhood, M1 Finance, any brokerage accounts that you may use, figure out what businesses, what companies you like. And if it's also, you want to add crypto in there, if it's crypto that's your thing, like my little brother loves crypto, if crypto is your thing, then figure out crypto. But the point is that 1%, if you focus on it, if you spend, even if you don't spend that much time on it, it can grow to overpower the other one. I was talking to my sister recently and she was asking me like, yo, I'm already investing in my Roth IRA. I'm already trying to max that out. I have a few extra dollars. Where can I be putting this few extra dollars that I can dollar cost average into? And I said, what companies do you like? What are companies that you buy their services? What are companies that you enjoy and you want to learn more about? Because part of it is you can have investment, good businesses, but it may not be a good investment. But on the other hand, you can have great businesses that are also amazing investments that can compound for you over time. Just think about if we were back when we were kids and we were playing with our Apple iPhones, and we were playing, starting out with YouTube and all of these things that we knew what was about to come. And we were just like, yeah, just put money into those companies. Think of just how amazing that would be for us today. But the point that I want to share with y'all is what I'm going to be doing, and this is just my advice to everybody, is most of my money is just going to be in my 401k and my IRA. Those are just going to be in the total market, just investing in the total market. And on the other hand, I'm going to try and find businesses that can outperform and do really well for me. And I'm just going to dollar cost average into those businesses. And I'm doing, like I've said before, I'm going to limit the amount of businesses that I'm going to be investing in. I've said it before, 10 businesses for me is too many. Like he said in the clip, 3 is where you're going to be very hyper concentrated. For me, I'm trying to whittle that down to 5 that I absolutely love. And I see great opportunities in front of me. But that's what I'm doing. Let me know what you think. Do you think it's a good idea? Is it a bad idea? Just let me know. Put it down in the comments what you thought about that clip. By the way, go check out this full interview. There's so much stuff that you can learn from Mohnish Pabrai. He's one of the great investors that we have in our time today. But anyway, that's all I got for y'all. I hope y'all learned 1, maybe 2 things out of this entire thing. And if you did, hit that like button. If you loved it, hit that subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And your boy is out of here. Peace. Whoosh.